I want to talk more about the markets now with Michael Shaoul. He's the chairman of Marketfield Asset Management. Michael oversees $1 billion. His Marketfield flagship fund beat 91% of its peers last year. It's certainly been a tougher market so far this year, Michael. I want to talk first about what's been dominating, not just the Apple news, but really what's been going on in Europe, right? We had much more pessimistic outlooks coming out from Jean-Claude Trichet, the liquidity measures, also the BOE. But the markets here seem to be kind of shrugging that off. You think they're just focusing more on the economic outlook in Europe?
I think people have sort of given up hoping that Claude Trichet would do anything in his time as ECB president, and I'm sure some people hoped that he would have cut rates today, but the fact he didn't really worry people. The ECB has been doing one thing, though. They're not talking about it, but they're doing it. They are expanding their balance sheet. Their balance sheet has grown by roughly 18% over the last 13 weeks. That's a little bit more than $300 billion. That's roughly,
and that's a positive, too.
Yeah, it's an important step. It's very strange they don't talk about it, but they are doing it.
Okay, but it's not translating into, you are seeing a rally in the European markets, but over here it's not translating into more confidence.
No, because no one talks about it and no one notices it. What it has translated into in Europe is slightly more stability in their bond markets. You've seen Spanish yields come down significantly in the last couple of weeks. Things have stopped getting worse over there. It doesn't mean they won't get worse in the future, but there's been a sort of strange calm in European sovereign credit recently.
And when that calm continues, though, Michael, at some point, is that going to reduce the volatility here in the United States, then?
Well, if they really fixed it, it would. I think over here what we're seeing is economic data has started to get a little bit better than consensus. We took consensus expectations way down over the summer, and the data really isn't so bad. I'm not quite sure whether or not the US can start ignoring Europe. It's certainly a possibility.
Okay, Dom?
Michael, I was just going to say, as we look at these relationships between stocks, they keep on going higher and higher. Everything trades together. But when things do get back to normal, where do you think the value is going to be? What's going to propel things higher, in your opinion?
It's true that on any given day everything's moving in the same direction, but if you look at the depth of decline this year, there's an enormous difference in S&P groups. You have things like retail and technology down less than 3% for the year, and you've got things like the financials down 35%. So, I would say that the divergence has already taken place, and it's fairly obvious which groups want to go higher, and it's the ones which don't want to go down.
But financials, then, at what point will you look for a buy signal in financials? What is going to be a buy signal there?
Eventually they'll stop going down and there'll be a massive short covering rally. I still think that most of the large banks are bad businesses for equity holders.
Okay, all right. A lot of people say there's still black boxes, essentially hard to value these firms.
Yeah. Very difficult for them to deliver the sorts of earnings that people want to see.
Michael, thank you.
Thank you.
Michael Shaoul of Marketfield Asset Management.